Good afternoon. This is Bob Haberkorn, Senior Market Strategist at RJO Futures, and John Caruso, Senior Market Strategist as well here at RJO Futures. Here to discuss the upcoming Fed rate hike meeting coming up on December 16th. That's going to be on Wednesday. It's going to be the most anticipated Fed meeting in quite some time. 2015 has been filled with expectations for the Fed to increase rates. We're finally at the point where the consensus seems to be in the Fed speak we've been hearing over the last month since the last meeting that they will raise rates by a quarter point. But it's really going to depend on how will it affect the markets. It's going to depend on the language. And are they hawkish? Are they dovish? How aggressive will they be?
Yeah, I think it's a foregone conclusion they are going to raise. Obviously, there's no guarantees there, but I would probably put the percentage at about 90% that they're going. Janet Yellen's delivered a series of hawkish speeches leading up to this moment. And a large part of the market has seemingly already priced in a quarter point rate hike if you look at the U.S. dollar on the rise. Bob hit the nail on the head here. I think that the main driver or driving force of this meeting is going to be the language involved. Are they hawkish? Are they dovish? Does this become is this a one-off event as far as the interest rates are concerned? Or is this something that starts a progression of a series of interest rate hikes moving forward? My contention is they're going to be very cautious with this rate hike. I think it's going to be a wait-and-see situation. If you look at the broad scope of the market, the global economy at the moment, we are experiencing broad-based deflation. Emerging markets, if you look at them, down 30% since September 2014. And if you remember, that's when the Fed started to scale back QE and started to move to the point where we're at right now with a possible interest rate hike. Commodities, oil, gasoline, natural gas, we're seeing these markets crash to 6-year lows. And I know Bob's going to hit on the metals markets, gold, silver, all of those markets hit 5-6 years lows. The iron ore and steel sector down 65%. So we're seeing deflation at the moment. It appears as if the U.S. consumer seems to be slowing as well. You look at the manufacturing sector. We just had the last reading on ISM that came in below the 50 mark at 48.6, which shows contraction. So the Feds are potentially raising interest rates into what quite possibly could be a global economic slowdown.
Yeah, and you have China that just cut recently last month rates. Europe is still doing their QE program. So it definitely is an interesting time for the Fed to be raising rates. Right. It does sound like they are going to do it, though. Consensus does seem to be pretty unanimous that they will. I think the only surprise will be if they don't cut rates. If they don't cut rates, expect oil, expect gold, silver, anything commodity related to trade up significantly. That would be a real motion carry. And I wouldn't be surprised if that's something we do see. But we'll wait and see what happens. Gold right now, it's been trading down. It's at around $10.70 an ounce right now, and it's traded as low as $10.50. This downside move, like John said, and with the commodities we've seen over the last 2 months, is baked into the cake of Fed rate increase by a quarter point. Key is language, like John touched on. And in my thought here, next year, 2016, is an election year. I don't expect the Fed to be too aggressive next year. Right. And I think that's going to be reflective in the language that they use. If they do the quarter point increase, presidential election year, I don't think you're going to see quarter point, continuing raise, maybe one more, if that at all. Right. So Wednesday, it's going to be an interesting day, to say the least. It's highly anticipated that many traders will be keeping an eye out for. If you have any questions or have any, want to talk more about this in depth, please feel free to give any of us a call over here at RJO Futures. We'd be more than happy to talk through the Fed with you.